Stocks are selling off today again. It is Tuesday, March 11th, and we had a big sell-off yesterday, and stocks have been really selling off since mid-February. The Nasdaq is in a correction, the Russell 2000 is in a correction, and the S&P is flirting on going into correction territory. Stocks really perform over the long term really well. They reward investors. But at times, stocks lose money, substantial amounts. In 2022, stocks lost on the S&P about 25%. On other occasions, they lost more. How do you plan for that type of event, or how do you hedge against that type of event? Bonds. Bonds are a good way to diversify away from stocks into an investment class that is going to do well when stocks are suffering. And part of my strategy is to have a bond portfolio. I've talked about it for a couple of years now. When stocks are really doing well, and I produce a video on bonds, stock investors, have a lot of criticism, and sometimes it's fun to read. But in general, yeah, when times are great, stocks are awesome. But right now, when stocks are suffering, bonds look great. I mean, who would want to lose? For example, Robinhood stock yesterday went down 20%. Robinhood is a great company. I love the stock, but it went down 20% in one day, and it's going down today. Bonds, on the other hand, just move a little bit, and they have a steady stream of income in the form of interest. Let me show you a few examples. Then I'm going to compare one of the examples to the S&P and show you how the difference of a bond ETF versus the S&P year to date. I'm going to start with a ETF from Vanguard that invest in short-term bonds. Most of these are government issued by the US. And the yield over the last 30 days is an impressive 4.34%. Now that may not look all that great, but again, over the last 30 days, the S&P is close to 10% down. So if you compare the two numbers, really the Vanguard short-term bond index is beating the S&P by about 14%. So right now I'm glad that I've got my bond portfolio, and I've got it in three different categories. Short-term bonds, which these tend to have a lower rate of return and lower risk, because these are short-term loans to the government, short-term loans potentially to high quality corporations as well. Now moving up the risk ladder and getting a better yield in intermediate bonds. Now these again are loans to the government principally, as well as corporations that have maybe a 10-year term. And they're riskier because a lot of things can happen in 10 years. But the Vanguard intermediate term corporate bond, and by the way, I own all three ETFs I'm going to talk about today. I own the short term bond ETF I just showed. I own this ETF, and I'm going to show a long-term ETF that I also own. This one has a better yield over the last 30 days, 5.21. Again, that looks really good when you compare it next to the S&P, which is dropping 10%. And these are loans that to the government. You see slight appreciation year to date. The appreciation on this particular ETF, it's up 1.56%. And it's up again today. Interest rates are dropping. When interest rates drop, investments like these rise. And you combine that with the income that this ETF produces, and you get that yield of 5.21%, which looks really good while stocks are crashing. And the third and final ETF that I'll share is the Vanguard Long-Term Corporate Bond, and it has the best 30-day yield. It has the highest risk. But when we talk about risk in bonds and stocks, stocks have lots of more risk. And I don't need to prove that to anybody. Just look at the last 30 days. You see how stocks could really lose value very quickly. Bonds don't do that. But long-term bonds could lose value. You can lose 20% potentially in a long-term bond if interest rates were to move. If interest rates rise a lot, the value of a long-term bond drops. And that's what happened in 2022. If interest rates go down, the value of a long-term bond rises. And that's been happening. Interest rates have been dropping. So this particular ETF has gone up in value, almost 2% in today's value. And combine that with the income that these produce, This is a pretty handsome return on a year so far, 2025 year to date, when stocks are really suffering. This is looking pretty good. Let's compare the Vanguard long-term corporate bond real time to the S&P. And this is real time here as I'm recording the video. And you can see that the ETF for the bond is up year to date. And that's been a nice consistent, upward rise in the bond ETF. On the other hand, the S&P has really gone down from mid-February to this point. It's down almost 10%. And the difference year to date between the two is over 7%. It's actually about 7.3% is the differential in appreciation, income, and overall value creation. Now, bonds are not the majority of my portfolio, and I don't want that. I want the long-term wealth creation of stocks, but I do want a fair amount of bonds so that I could weather downturns like the one we're seeing right now, where stocks are really selling off. It actually gives me a very substantial amount of capital should I want to go from bonds into stocks. I have about 22 to 23% of my overall portfolio in bonds and cash. And if things get really difficult for stocks and I see great businesses really discounted, I will sell some of these uh, bond ETFs and buy shares and stocks. So it's a great way to diversify going into bonds, and it preserves capital to deploy if the opportunities are great. Warren Buffett is in a lot of bonds. And I know that most people will state that, hey, Warren Buffett's in a lot of cash. And I think that's just a general comment. When you examine closely what he's doing, he's actually invested in short-term bonds, and that's where he can get a yield. And you can see that Warren Buffett is beating the S&P for sure in that bond portfolio that he has. But it's a similar situation where he's investing in a very stable investment, and maybe at some point he decides, hey, I'm going to put this into a stock that's heavily discounted and has a great risk reward scenario for him. That's what I'm looking to do with my bond portfolio. Is we'll see how bad this correction ends up being, and we'll see how good stock prices look for some of these businesses that I want to be a part owner in. It's good to have a pile of cash and bonds where I can draw capital and put it to good use as the stock prices continue to tumble. So that's my video on bonds. Again, I'm primarily a stock investor. I also invest in real estate, I invest in bonds, and I invest in crypto. Most of my videos on my channel is really focused on stocks, but I thought I'd share this video and hopefully create some ideas for my fellow stock investors to see how you can diversify and beat the street when times are tough. Thank you for watching my video. I appreciate it.